one of you, and we're continuing with that. I extremely thankful for all of you for making it. I don't know if it's working at your place or not, but thank you for making it. Today's webinar, we aim to deliberate upon the influence of evolving global supply chain dynamics on the industrial warehousing and real estate sector, especially in the current times. The logistics and warehousing sector is expected to expand multifold, and this being the first segment in the real estate to recover from the shock of pandemic. There has been a greater penetration of e-commerce. There has been a greater penetration of internet thanks to whatever we have been through in the recent time, and this brings in a lot of focus on warehousing and expansion of warehousing in India, especially in the tier 2 and tier 3 locations, which is the preferred location for warehousing for a lot of e-commerce company, and also therefore a very exciting investment destination for investors, which are more likely to switch towards the resilient asset classes. So there are divergent views. We'll hear from our panelists today. We have a galaxy of speakers, really distinguished speakers who have joined us today to share their views, and it's my proud privilege to introduce them. Amongst us, we have with us today Ms. Lalita Indrakanti. She is the Head of Global Business Operations with IKEA. Mr. Amit Malakar, who is the Chief Customer Officer of Welspun. We have Mr. Rahul Arora, Partner, Trilegal, and of course, Mr. Jagannath Padmanabhan, who is an old friend of Vicky, Director CRISIL, who's joining us today. This session will be ably moderated by Mr. Srinivas Rao, CEO Asia Pacific Westian Global. Srini is the founding member and CEO APAC of Westian Global Workspace Services and is considered as a pioneer of a professional in the real estate and urban infrastructure space. So I hand over the baton to Srini. I'm sure Srini will take care and maintain the time well. Over to you, Srini, and welcome once again all the delegates. We'll come back with some very interesting observations by the end of the session today. Thank you very much. Srini, over to you.
Thank you so much, Neerja. Thanks, panelists, for joining today and all the 470, 500 odd people who have registered for this occasion. So warehousing and logistics sector, very interesting, very, how do I put it? It's probably the most, as Neerja said, the most resilient sector right now. And it's probably the most talked about asset class of recent time compared to commercial residential sector. This is probably what everybody's talking about. Everybody believes, you talk, the talk on the street when I walk down and I talk to many people across, the tier 2 and tier 3 towns, or for that matter, the suburbs of the cities that we live in. Everybody wants to get into the logistics and warehousing sector. So you talk to the guy on the street, he says, sir, I need to be in the sector. I'm going to be building the largest warehousing and logistics, supply chain management. I mean, you name it, everybody's talking about it. Whether they understand about it or not, we really don't know. But this is the buzzword that everybody's talking about. A few years back, this sector was, popularly known as godowns. And today, from being a godown and a retail shed, has now become a more organized sector. In 2020, when actually the pandemic struck us, almost every sector was in the gallows. I mean, you look at commercial, residential, everything went down the drain. But this was the only sector that was like shining like a silver star right up in the sky. And everybody thought this was the sector that was going to take us out of darkness. And it is doing that today as we speak. It is called the silver lining sector because its fundamentals are extremely strong. And above all, thanks to it, it's now actually part of the essential services. And that's something that's evolved in the last, I would say, 12 to 18 months now. This is an essential services sector. Not that all of this growth happened during the pandemic. So right up to 2017, this sector was about a 13 million absorption sector. In 2019, and Amit can correct me as we go along, this went up to about 40 million square feet. And during the pandemic, it kind of dropped down thanks to the lockdowns and stuff like that to about 30 million sector. This sector is roughly expected to go up to about 60, 70 million square feet in the next 24 months. And what I understand, from the various sources that we have been talking to is that 50% of this sector is going to be from the organized players like Amit and other players in the industry. So keeping all of this in mind, and I have an end user here, I have a developer, I have the best of the legal brain here, and I have somebody from CRISIL and the financial sector. I thought this would be the best time to ask some of the most, posing questions to each one of them. And I'll start with you, Amit. What do you think is going to be the growth for the sector over the next 24 to 36 months? I mean, I want you to take your prism out and tell us from your viewpoint, how do you see the sector evolving over the next 24 to 36 months?
Sure. Thanks, Srini, and thank you, Vicky, and great to be on this panel. Yeah, so we heard from both of you that yes, it's a great sector to be, and it's very easy to understand why, right? The whole logistics supply chain is what is keeping our wheel, right? And why do we need warehousing, and why will it keep growing? Because India is a growth market, population's growing, consumption's growing. To meet the consumption, there's a lot of production. So when production and consumption don't happen at the same time, there will be movement in the form of logistics. And when they don't happen at the same time, you have to store, right? So warehousing will keep happening, right? And because India is booming when it comes to manufacturing, and we have companies who are sourcing from India supplying to the world, that will keep happening, right? So there will always be requirement for storage and storage of different products. And this space will keep growing. Right, so that's why everyone's so bullish about the space, right? So just like 2 lines about us, Wellspun One. So we call ourselves a full stack warehousing real estate developer, right? What essentially that means is we buy, build, and lease. We buy land, right? We build it, build warehouses, for customers. Either we go speculative or we go with specific customer requirements. Right, and then we lease them out on a long-term basis. And again, the word here is long-term. Typically leases are 7, 10, 15 years. That again adds to the resilience. Customers, and we've got Lalita, and obviously she'll share more with us. Customers want to be in a space which they can call theirs for a long time, right? And they can use it, to their specific requirements, right, for their products. So the way the sector has been growing, as you rightly said, Srini, from go downs, all the way to, to the grade A warehousing that we call right now. And it's mainly because as urbanization has set in, land prices have gone higher, right? Where earlier, to accommodate more inventory, you would take more horizontal space. That started getting more and more expensive. Then you realize that you go vertical, you improve your per square feet utilization of the land. That makes storage more inexpensive or lesser expensive, and that's how go downs gave way to warehouses, which have now given way to automated grade A, top of the line warehouses, which can be compared with anything across the developed world, right? And with GST coming in, it gave companies in the country a little bit more space in their P&L to absorb the incremental operating costs for such warehouses and feed up some and encourage people to add some more balance sheet money into building such building, right? So you net you became you remain cost neutral compared to where you were, and that improved quality. And that brought in a lot of global investments, a lot of companies coming in. We see so much of investments. But just second quarter last year brought in about 5,500 crores of investment into this space, right? Compared to, and which is more than half of the total investment which came into India in commercial real estate. So now warehousing is driving more than 50%, the lion's share of investments in commercial real estate, and the reasons are the whole India growth story and the whole space to grow in India, right? So 2020 was a 240 million square feet of stock in India across all warehouse types, A, B, C, D, all of that, right? 2021 was an increment of 31 million, right? And these are numbers, Knight Frank reports and JLL reports. right? And out of this, 65% has been grade A, right? Which is very encouraging for people like us, because we are building grade A, and we realize that customers are valuing it, right? And it will keep growing. We estimate, and based on the India growth story, and based on all of these demand drivers, consumption, production, global trade, in the India economy, we expect this consumption of new warehousing space to grow at a rate of 21%. Right. So in the next 5 years, by the end of 26, we expect a 240 million stock of 240 million square feet of warehousing stock to grow to about 300 plus 310, right? At a CAGR of about 21%, right? And that will drive in more investments into the country. We obviously are going to get a lot better. And a key aspect here is going to be a regulation, right? So if we just look back, 20 years back, hardly you would have a car with a seat belt, right? And now you don't have a car without a seat belt. ABS has become standard, and
I think we lost Amit there.
No worries, Srini.
Yeah. So Rahul, Amit was talking about growth regulation. So I will probably, pass this question to you. So there are a lot of customers, people asking us, asking you rather, what are the issues when it comes to land? What are the issues? What do customers look for? What do investors look for when they are making investments into this particular space, especially the logistics and warehousing space? And what are your thoughts on that? And what are you seeing rather?
Look, very valid question. And most of the clients which we have, when they are moving into warehousing sector, as Amit was mentioning, the requirement is stemming from category A warehousing, where category A differentiates from B and C is in terms of size and scale. So the land requirements for this category are huge, running from 50 acres to 100 acres. When we are talking about that scale of land, it is not very easy to really find the ideal block or the piece of land on account of several reasons. India being a fragmented society, there have been land parcels which have ancestrally been held by farmers, families. There are a lot of issues when it comes to diligencing these lands, title on these lands, which is an imperative aspect, specifically considering most of the investors today are foreign investors. If we see any issues in land, to them, it's a clear no-go. So there is a lot of impetus which is being given on the quality of the asset in terms of whether a complete check has been carried out or not. Now, there are several factors which are related to the land itself. If one were to evaluate, most of the land which is being used for warehousing is currently agricultural land. You don't have much alternate to that other than going in for industrial development corporations, where you could request for blocks of land which could be then converted into warehousing projects. Not all of the investors would be comfortable doing that given the specifications, location, size requirement, etc. So if we were to approach on agricultural land, then the aspects to consider would involve land identification, where the companies cannot directly deal with the local farmers, but they'll typically route it through an aggregator. So there'll be always a middleman interface involved, which really resolves a lot of aspect when it comes to on-ground dealings for the multinational as well as the the tier 1 players. But at the same time, it also increases the cost of the land because you do not have a direct interface with the end seller. While of course, the process and ease of acquisition of land is enabled and the timelines are shortened to a certain extent because of this scheme of approach. Secondly, what typically takes time is the diligence part of lands, because each of these projects eventually have to go in for a financing. When we are looking at a financing with a 70-30 or whatever debt equity model, each of the banks would want to create a charge on the facility. That's where it would become extremely relevant to have clear access to the land in terms of whether for the last 30 years clear title has been established or not. Now the situation is such that it involves a lot of documentation review. The documentations are scattered across places between the sub-registrar's offices and not very well maintained, which really adds on to the trouble in the title coming out clear. So we have often seen that, a lot of clients approach us for development of projects in suburbs of NCR or in Gujarat, Maharashtra, and several other states. But it may not be a sure shot approach that the first piece of land you identify, you may end up closing your assignment with just that block. You may have to have alternates, which really leads on to pressures in terms of implementation timelines and deployment from a PE fund's perspective, which really has a ripple effect. So the need of the hour is how to cut down on the timeline, how to shorten the span of time when the project is on the blackboard to really being implemented. That's where the legalese really get stuck, land being one of the biggest one, since all the other aspects coming to that level have already been taken care of. The very next aspect which then becomes relevant if you go for an alternate with an industrial development corporation. In industrial development corporation, laws and rules are not really up to the mark when it comes to warehousing projects. A lot of time warehousing projects are going to work on a model where there are going to be boxes of different size and specification dependent upon whether it's a BTS or whether it's a simplistic warehouse or it's a facilitation center. Each of the blocks may have its different sort of lending requirement, varying from a construction finance to a LRD, etc., etc. And the underlying leases are one by the industrial development corporations, where it's not possible if you have at least 5 to 10 lenders financing those projects, then how is the enforcement going to function? Given that segregation of these blocks or units is not easy. So there are a lot of innovative structures which we have to craft for clients or to come up with solutions, which regulatory policies have yet not delved into or looking into. These are, to my mind, possibly two of the key areas which we see where the issues are typically coming up. While at the same time, despite these issues, our perspective and feedback is that we've seen the market being extremely aggressive, as Amit was mentioning. The requirements are largely BTS is the need of the hour for a lot of players, which they are looking at. However, it has its own set of challenges in terms of confirmation of leases, zeroing down on the players from a cash flow perspective. Of course, it helps you since there could be some upfront advance payments which can be sort of factored in. But yes, so BTS definitely has really picked on. And then in-city warehousing again is something, given the context of COVID, specifically the same day facility, same day delivery model, which most of the e-commerce companies which we see around have been focusing on. In-city warehousing, again, is something where we see a lot of customers reaching out to us, for evaluating different assets for purchase. Of course, there are issues in terms of costing, transportation, traffic restrictions, which really impact such facilities. But yes, there has been growth in this sector despite all the legal challenges.
Thanks, Rahul. And sorry, we lost you, Amit, for a few seconds there. And so we kind of took your question. Whatever you were speaking from a regulation standpoint, we had Rahul come in. So Jagan, this question is for you. Everybody talks about this sector being the shining star amongst all the asset classes. I want you to take a dab at it and tell us whether this is really the shining sector. Is this really the sector that most companies need to invest? Because the word out on the street is that this is where I need to put my money in. This is where I need to go. So I want your perspective to this. Again, you can give us, rip the whole story apart and give us the true story. But I want to understand what's your view on this, whether this is really the shining sector. Is this where the money needs to be put in by corporates, investors? So what are your thoughts on this?
So when it's all darkness, a small light is shining, right? So I think in the context that we are in, certainly warehousing has done well for itself. But just to step back, kind of take the question in entirety and give a perspective. From what it was about, I think you mentioned in your opening remark about 3 to 4 years before, Godowns is the name, from where it was. There is capital which chased this particular sector, and good money came in from pension funds, private equity players, and general funds as well, who had put in quite an amount of money into this particular sector. And that's how the grade A in tier one cities got developed. And there were a lot of deals also which happened, and change of hands happened as well. Those were really the heady days, so to say, where the returns were quite good, long-term contracts were there, and hence visibility of this coming through was quite much on the table. I think in the last 18 months or so, if you were to go and talk to people who are continuing to invest in this particular sector, they would say returns have uh, significantly tapered down. It is competition has increased significantly. You cannot just give a plain vanilla product. You need to go much beyond tier one cities, and the panelists out here also kind of put that across. The tier two and tier three locations needs to be there, and there comes a lot of issues and challenges when you take up projects in the tier two and tier three locations. Governance aspects also needs to be taken into consideration. So the risk factor also increases when you go into that part of the tier two and the tier three part. So you need to weigh this in and then look at what are the kind of returns which is coming through. So if that was the comparison to 3 years before to now, things have really are more sharpened now. Um, this is a sector now only for people who are serious about it. So it is not for people who are trying to make a quick buck because the sector is growing. I think it's certainly not the case now. You need to be invested for a longer term. When I say longer term, at least for 5 years and above, because the kind of needs which are coming up from the end user, you need to put in capital and make that made available, and the BTS and other aspects that is being there. So I think then the returns will take its own time to come through. The other one also, that the sector itself is going through a significant change by itself in terms of standardization, in terms of how and the end product, that the look and feel, the technology aspect, all of that is also changing. So the customer at the end of the day is wanting same look and feel across multiple places that he is wanting to operate, and hence you cannot have a differentiated service. That means you need to invest in getting that service being uniform. So hence the larger point I'm trying to come across is, again, this is not for people who want to come in, make a quick buck and make an exit. So it is getting very sharply aligned with people who know the market, who want to be here for longer term, and that's where they will be able to do it. Is it a shining star? Yes. Among the other sectors that you are having currently, yes, it is continuing to give good, healthy growth rates. I would slightly differ from the initial remarks. From FY20 to FY21, it is not that it has been a hunky-dory and things have really grown significantly higher. There have been pockets under which this growth has happened, but there are other areas as well where a degrowth has also happened, or a significant addition as comparison to FY20 has not happened. So it is not a uniform across the board, across all markets that you see growth happening. So again, that means you need to pick and choose where you need to play, which also puts in across a layer in terms of the risk aspects which are there. So those are the initial remarks that I would put across. Also the contracts are becoming more and more. It is not long-term nature in long-term in its nature. It is coming to between 1 year, 3 year. The kind of escalation clauses that you can put across is also getting debated significantly. People want to cut down on costs given the kind of environment we are in. So those challenges are also playing out as things are. Having said all of that, still in terms of the real estate space, that if you were to look at it, I think with respect to the industrial, with respect to commercial, with respect to the residential aspect part of it, the warehousing and the logistics, it has a significant headroom for growth going forward as well.
Okay, so we've got a different perspective from the euphoric statement that I made and Nirja made, and even Amit is still euphoric about the growth. It's a good perspective from that standpoint. So let me now ask this question to Lalita. So you've heard all, the developer, the legal guy, the finance guy. Now it's up to you as an end user. So what's your take on the entire thing? Is it a shining star?
I think it is, definitely I would like to believe it's a shining star, because unless the sector is up and running and adequately supporting all the retail organizations, it's not possible for end consumers to get their wishes fulfilled. So from that perspective, I definitely look forward and believe that it should be the shining star. But of course, the competition from an e-commerce perspective is also pretty fairly high.
Okay. All right. So Amit, I had a question for you specifically. Jagan talked about some degrowth happening in some of the sectors. Can you kind of give us a view on that? Which are the sectors where they're seeing a degrowth? Because from what I understand from Jagan is that there are some things that are doing extremely well and there are some things that are not doing very well. So you as a developer, what's your thought on that? And if you can tell us where exactly we are seeing the degrowth.
Sure. Yeah, so because of the multiple lockdowns, right? And anything which was consumption, anything which was discretionary spending saw a cut down, right? And because any sector which was catering to discretionary expenses saw degrowth. Now warehousing for those, let's take apparel and fashion. Now marriages were cut down to 50 people, right? Where probably you spend the most, right? Where you would probably go and wear, probably a new outfit every day or twice a day, right? Now all of that saw degrowth, right? So retail, fashion, apparels, all of that came down. But essentials went right through the roof, mainly because of e-commerce. So what went up was consumption of essentials, and a new channel of e-commerce came in, which every FMCG player would say that e-commerce is 3 to 4% of their revenue channel. Now became significant double digits, right? And now we see most of these FMCG guys setting up a specific direct to consumer approach, right? Many of the original traditional distribution oriented FMCG guys are now going direct to consumer, and you see new brands coming up, right? So the whole e-commerce space, delivery to end customers, all of that has gone up. Now people have moved from where they were into their natives, right? So they've gone into villages, they've gone into tier 2s, tier 3s from where they came from, and consumption went up there, right? And probably that'll be here to stay for a fair bit of time, right? With internet, someone in Guwahati, someone in remote parts of Northeast India can consume the same product which a metro city consumes, right? Now all of that has to be delivered, has to be stored. So there will be warehousing requirement over there, right? So the economy of the country did see a shrinkage. Discretionary expenditure did see a drop. Warehousing related to storage of those products did see a drop. But hopefully, if we don't really have a bad third wave, I'm sure we'll be back on. Obviously, from where we were last year, the economy has grown 24-25%. It'll grow even more, right? So I think it will be back. And the fact that the whole consumption story, the whole supply chain logistics story for India is here to stay. One of the few growth countries in the whole world. I think I believe it will be a shining star. My expectations of single land developers who are converting them into warehousing and expecting a high yield from them will drop, because now customers will be more discerning. They'll want good quality. They'll want quality which can stand for 10, 15, 20 years. Like Rahul said, there's a lot more diligence done on the land. So it's in it, as rightly said, for the serious players, people who want to be in it long term, who want to do things the right way, who want to be futuristic into what they bring in into the country. Because every consumer, as an end consumer and a B2B consumer who's consuming warehousing, is now asking for better. They want more bang for the buck. They want the rupee to stretch that much more, that square feet to stretch that much more. And everyone's talking in terms of throughput, how much I can churn out of that particular warehouse. If I was doing 200 trucks of material in and out yesterday, can I do 250? Because my cost of operations has gone up. Can my efficiency of that same space go up? Can I store more? I'm now being measured in terms of cubic meters of storage rather than square foot of storage, right? So that's a change, right? And penetration of trade and economy has gone into tier 2, tier 3s. So a lot more, warehousing will come up in those places. And all of this put together, there will be capital, but it will not be concentrated in those 7-8 cities anymore. Capital will be spread out over Bharat, as they say right now, right? So we'll have at least 15-20 cities which will draw capital.
Especially God's ears with respect to the third wave. I sincerely hope India doesn't have to go through that third wave. Sorry, somebody was saying something.
No, I was just adding to what Amit was mentioning, that in terms of e-commerce, when we are talking about it, it's not only the B2C segment, but also the B2B segment, which has drastically sort of changed the approach of how warehousing was historically being looked at. Like these days, we come across so many startups which are purely focusing into B2B catering, whether it's the likes of Uran or whether it's the likes of Moglix. If you see, the platforms are more, they are all unicorns of the world now. Which are largely focusing on GMV running into billions of dollars in a year. And they are purely relying on 3PL or external warehousing facilities for the stock maintenance and the dispatch and everything. So in that sense, as Amit also mentioned, look, the penetration has gone up to a level that it's sort of, to an extent, some of it would be an irreversible trend, which is only going to go up with the sort of, the increase in the digital interface and the internet accessibility going into tier 3 cities now. So we see that, this is definitely going to add on to the boost in the warehousing sector effectively. And also, if one were to look at from a regulatory standpoint, you were to talk about how the government of India has been looking at it in terms of development of highways and infrastructure. One cannot ignore that all of this is facilitating movement of goods seamlessly. Let's say for the introduction of e-way bill, intercity movement or interstate movement has really been made easy, if you ask any logistic player. If one were to look at the sort of projects which have been initiated, even having that as a vision is a first step to eventually having the sort of framework or network which a country of this size and nature would require. Let's say the Bharatmala project or the Sabamala project, which is looking at port modernization, looking at enhancing the freight transportation, reducing time on that front. So there are a lot of factors on the logistic front as well, which are really adding on to the warehousing being the preferred sort of storage option or approach for a lot of industries. In fact, I don't want to forget to mention the budget. If you look at how the union government has been allocating funds towards highway development, for that instance, or dedicated freight corridors which are coming up. So all of it is really going to play a major role in terms of how warehousing industry of the future is going to really appear.
Interesting thoughts. Lalitha, this one's for you. Brick and mortar industry, for again, organizations like yourself, was the big breadwinner all along, right? I mean, I had to go into an IKEA store, have the whole feeling of being there, and then buying the product and coming back home. I did some background check, not just on your organization, but all these brick and mortar stores, and we realized during the pandemic that the e-commerce platform that these organizations had a humongous hits during that phase. I mean, again, I'm not restricted to your organization per se, but from an industry perspective, e-commerce is here to stay. Everybody's talking about it. So what do you see, the play now with the brick and mortar stores vis-a-vis the e-commerce, and how it's going to impact your line of business?
If you look at the normal sales trends and the reports, e-commerce sales is expected to reach about roughly 18% of the retail sales worldwide by this year. And probably it's going to double in the next 2 years. I think the omni-channel retail is on every single retailer's mind in terms of creating the seamless experience to customers is going to be very, very important. So you're absolutely right. I think all the retailers have seen tremendous amount of increase in online sales, and that also comes with its own set of pressures, right? So it's essentially managing the customer expectations, setting a new benchmark. Pressure is from many perspectives, increasing the pressure to innovate, to achieve a better cost to serve to the customers, increasing customer turnaround. And also with the increase of social media enablement, it's also another huge pressure. Consumer can really use the social media to make or break a business. So there is the overall e-commerce, there is definitely a spike, and it will continue to be the trend for years to come, is all the retailers believe.
So adding on to the earlier question and to your answer, so are you seeing organizations like yourself now starting to think about tier 2 and tier 3 towns as well? Is that going to be something that is going to be part of your business plans, not just your organization, again, from an industry standpoint?
Absolutely.
How does that play out?
Yeah, I think definitely overall, if you look at the data, that there is the trend of growth towards smaller cities from warehousing, real estate, retail perspective, right? But I think still as a country, we really have a long way to go to tap into this growing e-commerce market. I think the volume share of smaller cities in India and e-commerce market has tremendously increased to almost 46% in the last quarter from 32% year on year. Given this kind of sales and growth, it is expected that the smaller cities would play a significant role in driving the business. But we still struggle with a few aspects that need to be addressed in smaller cities. Essentially, things like supply chain challenges and risks, logistics network, adequate infrastructure. I think when we talk about tier 2, tier 3 cities, still an infrastructure is a massive issue. The roads, the connectivity, the ports and the airports. So all these things, the government has to focus from that perspective to create the better infrastructure. But there are also pros, plus points, right? The lesser real estate costs in the tier 2, tier 3 cities. So, but also, if I just take where my services hat in this, today, in the last 2 years, the amount of migration or the reverse migration that happened from big towns into the smaller cities, the consumers were pretty much sitting with all the organizations heavily adopting hybrid models for future, work from home. The consumers who used to sit in these big cities are also migrating back to the small cities. So hence that also creates a trend from an e-commerce perspective. The people who are sitting in Bangalore are probably in their hometowns today and wanting to live and continue with the similar kind of lifestyle they used to, and the easiest way for them to reach through e-commerce. So the smaller cities will continue to play a big role, and we really have to focus on that.
Interesting view. Jagan, I had a question for you. We've heard Amit talking about tier 2 towns. We heard Rahul say that, Bharatmala project, connecting of the roads. Ma'am, Lalita saying that, the future is tier 2 and tier 3 towns. how do we ensure, one is on the legal aspects, land is going to be difficult in these tier 2 and tier 3 towns. That's the land side of it. From an investment standpoint, is there a possibility of a REIT kind of a structure, or is there possibility that, a private equity is actually formed for tier 2 and tier 3 towns? What are your thoughts on that? And what kind of a legal framework, not really a legal framework, what kind of a financial framework we need to put together to get some money into these investment into tier 2 and tier 3 towns? I mean, do you have any ideas on that? Thoughts?
Yeah, so I think it will be, So I think the larger point is saying that how do you broad base participation of people into this investment class, so to say. So I think in today's context, if we were to look at it, we are at a situation where the whole infrastructure investment trust, either in terms of a REIT or also an InvIT, there's a lot of traction which is starting to happen. It started off not so on a great footing, I would say, but having said that, that was like at least 3 years before. Now things have leveled significantly. People have understood what the product is about, and now they are looking at least the owners of these infra assets are looking at this as one of the investment vehicle to kind of churn their capital, and so that they get an exit and they're able to get in a fresh capital into that part of it, and from the exit of the money that they get, they're able to invest in similar kind of projects otherwise. So that's happening, and I think you're quite right in to say that this could be one investment class product which warehousing sector, now that warehousing and logistics is also recognized as an infrastructure class part of it. They should see how they can leverage that further. Not that much benefits have got accrued because it's called as infrastructure portfolio, but you can still go ahead and utilize the brighter aspects of it and see how you can do it. So I think InvITs could be a way in which that you would be able to do it, and there would be good interest for brownfield assets to move it into this kind of a structure, and so to target it specifically into a tier 2 or a tier 3, it may be a difficult one to look at, but you can still have a mix between the tier 2, tier 1 part of it. And because the risk profile at the end of the day, if you come into any of this kind of a structure, they would have to balance that out. So that's why you just don't keep only a tier 2 kind of a thing. You balance it out with a tier 1 aspect as well. Then yes, you have something going. And that will also bring in a lot more accountability, lot more transparency in how things are done. It will bring in a lot more professionalism aspects into this whole part of it, and it's going to only augur well for the sector, because at the end of the day, if more people are going to be tracking a particular sector because of the capital which has been put across, that gives its own level of accountability for people to say put things across, and hence you would be able to then mirror this across in multiple locations as well.
Interesting view. Lalitha, this one's for you. Are you seeing artificial intelligence, robotics, all of that come into this particular business? I mean, I'm hearing a lot of things, but what is the level of implementation in the Indian market?
Yes, definitely. I won't say how much of it is adopted already as such, but I think there is definitely a strong need to use technology to understand consumer habit, bring innovations, automation. Data analytics and artificial intelligence will play significant role, and it will help you to increase the efficiency of your supply chain, your real estate, your consumer behavior in all areas. So this is absolutely necessary and essential to deal with the new norm from an industry perspective. Having said that, despite increasing automation, I think the industry will continue to use human coworkers or robots, and this is going to be pretty important. AI will make the workplace probably more safer and smarter and efficient, but also it will allow the humans to focus more on creative problem solving, right? Because AI can't probably do a creative problem solving for you. So we still need the human workforce to do all of that, taking the help of AI, data analytics, and other stuff. It will play a big role in the industry.
Okay. So, I have a hard stop at 15:50. So I had a, quick question for you, for all of you actually, from a way forward perspective, and I'll give each one of you a couple of minutes to think, what are the challenges that you see for this growth sector? And Amit, I'll go with you first. The challenges for the sector, what are the strategies that we need to adopt, and from a long-term sustainability of the sector? You've got 2 minutes. Your thought.
Yeah. So as I said, challenges would be getting into the right markets and getting the support of regulations for it. Right. So and one of the challenges that we've tackled is that we've gone to the market, raised a category to alternate investment fund. We've raised equity from HNIs and from institutions, which we are then deploying into setting up these logistics parks across the country, right? So we are not really restricted to a tier 1, tier 2 city. We can go anywhere we want. We are diversifying the real estate portfolio. With a lot of internet consumption, with a lot of data consumption, we see data centers coming up. Right now, by diversifying this portfolio and bringing this into into a space which investors can invest in, it just improves the yields. Right, so that again becomes an exciting asset class, and adding a little bit more in terms of cold chain, right? So at this point of time, cold chain has been there, but then with e-commerce and with the consumption of essentials which require cold chain will just spread all the way, right? So quality aspects, regulation, getting the right money at the right place, and making sure that we give customers repeatable quality everywhere is something which is important, and we've embarked on that journey, and we are happy that we've been able to close out of a 500 crore fund. We've achieved first close in record period of time. In COVID, we achieved about 300 plus crores in a couple of months, and we are on track to close 500, and we are seeing significant co-invest interest. So that gives us a cumulative about 2,000 crores to put into the market. And I think this is just the first fund that we've launched, and I'm sure we can do more. So, that's 2 bits from my side.
Jagan, your thoughts?
Yeah. So my thought, and we've talked about lots of that. One aspect I want to highlight is standardization. I think for the sector now to grow ahead, you need to standardize multiple things. Okay. It's just not one aspect of the whole warehousing part of it. It could be in the transportation, it could be handling, the pelletization part of it. So there is multitudes in which we completely lacking out here. So, material handling equipment, which is there currently, multiple people using different material handling equipment, racking standards are not there. So as an industry, if we have to start viewing this as an industry, as a sector, with a long-term potential, and hence adopting, at least the government needs to come out with a standards which people can adopt. Today, there is not even a reference document, so to say. I know some things are happening in the background. Very soon it is going to come out. But I think that's the clarion call, if I were to say, that get this up and running, so that there is uniformity in experience of the end user, the provider, everybody is able to reflect upon, and some standards and KRAs can be put onto place. That's my specific call.
So Rahul, your thoughts? I want to hear your thoughts in terms of
echoing Jagan's thoughts, standardization possibly should be beneficial for the warehousing sector across states, so as to standardize the experience, not just from the implementation perspective, but also from the legal standpoint in terms of the ease of setting up warehouses, development, access to land locations, etc. While, we believe that it may be extremely challenging, given land being a state subject. Each state is going to have its own set of regulations, dependent upon area to area. There are issues which are peculiar and cannot be really wiped out over the course of next several years. So of course, there's going to be a bit of a struggle as far as development side of these projects and infrastructure sector is concerned. But of course, the government can aid that by streamlining processes, let's say for the approval mechanisms. While certain states have their warehousing policies, not all of them have come out with single window clearance mechanism. And even if they have, it doesn't mean that it is as easy as it sounds. Maybe in Invest XYZ state, the portals which we have for single window clearance, they are not very accessible when you ask or put in practice how easily this sector is going to get its relevant set of approvals. Similarly, the time which it takes to acquire land, let's say digitization of the records, is really going to come a long way in helping that. The government has been working on it for the last several years. In a couple of states, we have also achieved it, but it hasn't really ruled out the entire requirement of still doing the diligences the old way, the archaic way, how it used to be in terms of visiting the revenue offices, etc., etc. And then, of course, the infrastructure development, as Lalit also pointed out, in terms of the road infrastructure, the plans are being implemented, but specifically for tier 2 and tier 3 cities, the connectivity issues still remain. So maybe further impetus on that sector will add value to the warehousing development industry. Yeah, but of course, as Amit mentioned, data centers is an interesting part which is coming in. So there is a lot of new meat which is being added for this sector to be sustainable and how this can continue to grow. In fact, I don't want to miss mentioning, but the draft rules for the use of drones 2021 have already been rolled out for investor stakeholder comments. And that's a welcome move by the industry, although it's still at the stakeholder comment stage. And it's very advanced thought on the government's part to really come out with such rules. Let's see how it pans out in terms of implementation.
Interesting. So Lalita, your thoughts?
A lot already been said. I think I would only add one more point, which is in terms of the shared infrastructure. Maybe industry consortiums forming shared infrastructure. How can we better utilize the supply chains together, and blockchain and some of those things are also needs to be really looked at in addition to everything that people have already said. Thanks.
Interesting. I had a question for you, Rahul, Amit. Quantum of land parcel in southern cities for logistic and warehousing purposes. One question that came by from one of the participants who's actually listening in. So is there something that you can think about? What the extent of land for logistics and warehousing, what extent in southern cities? What should we be looking at?
Amit, do you want to go first, or should I go?
Yeah, so I think we can do it together. So in terms of southern cities, I think because the whole road infrastructure being pretty well developed in the south, right? We do see multiple places coming up. So and land is also available. It's not as if it's not. I mean, we are looking at places like Coimbatore, we're looking at Madurai. Apart from Bangalore and Chennai, Kerala probably might be a little bit difficult at this point of time, but then there are alternatives, catering to whole of Kerala from Coimbatore and partially from Bangalore. That's a great space. We see a lot of growth. Again, e-commerce is driving a lot of consumption there, right? So, and we are using a lot of drones. So while we are not physically going there to the site, we are sitting in Mumbai and doing a first level check using drones. And then, we are doing a lot of, diligence using a lot of digital data that's available. And we identify 4 or 5 places and then go there and see the land, right? So there is space available. There are means now to validate even before you go there, and then you finally go there and sign up. There's huge amount of demand. I know specifically why South, I think a lot of places, but South is definitely a growing space for us.
In terms, just to add on to that, Srini, in terms of the size of the land, it's a very subjective question depending upon the client-centric requirement, the sort of business they are looking at, whether it's a category warehouse. Jagan, sorry, you were on mute if you were saying something. But given the category of business which they are looking at, whether it's a BTS, whether it's a simplistic warehouse, I think the size of the land would really depend on the size of the company, effectively what they are looking at. But what I can confirm from a legal standpoint is basis our experience of working in multiple locations across Tamil Nadu, Karnataka, Kerala. All these states are really good when it comes to land acquisition processes. They are way more eased out, in fact, than the experience we would have in, let's say, a place which would be, let's say, an MP or a UP, where there may be not really issues in terms of dealing with the people, but mostly from record keeping perspective or in terms of how well the administrative processes function. But as such, we don't have any specific cons when we look at acquisition of any parcel size. Look, besides the warehousing industry, a large part of our portfolio also focuses on industrial land acquisition, where the land acquisition sizes run into several thousands of acres, not just limiting to 50 or 100. We do 3,000, 4,000, 10,000 acres on a monthly basis. There has not been, there are, of course, the run-of-the-mill challenges which you see in terms of SC/ST lands or specific category lands where approvals, etc., may be an issue, but they are all resolvable. Regulations have a window of provisions in terms of what sort of approvals can be taken and how those aspects can be resolved. So timelines are largely going to vary dependent upon what's the ticket size you're looking at.
Right. I think considering we're almost there, I have an interesting perspective to today's session. So I've heard from you, Rahul, in terms of the legal aspects and the challenges associated with it. We have gotten Amit's phenomenal view in terms of how the growth opportunities are there. We've also heard the other side where Jagan said there is degrowth. It is not as true as, or rather as profitable as what it was or what people perceive it is. And then we've heard Lalita's views in terms of how infrastructure needs to improve, how people from the tier 1 cities who moved into tier 2 and tier 3 locations that are driving the e-commerce growth in those markets. Thank you very much. Really, really a very interesting view from all of you. Thank you. And I've learned a lot from this session. I always thought I was a subject matter expert in this, but I've heard a whole new perspective. I've got a whole new perspective from all of you. Thank you, each one of you, for making this session very, very interesting. And over to you, Neerja. I think I maintained the 1557 slot that you gave me.
Absolutely. Well, excellent deliberations, excellent, superb contribution. I thank all the speakers, Lalita, Amit, Rahul, and Jagan, for sharing their perspectives and enriching our experience in this segment. My special thanks to Srini for so beautifully bringing out the perspective from each panelist and also weaving the whole story so beautifully. We discussed from allied infrastructure, road, land, we talked about standardization, opportunity, challenges. So very well covered, very divergent topics were discussed, and I'm sure the delegates have benefited by the deliberations. Indeed, I would like to thank our knowledge partner, Vestian, to help us put this session together. We will like to come back very soon with something as interesting as this. Thank you, delegates, for participating and joining us today. Thank you very much. With this, I close today's session.
Thanks, everyone.
Thank you, guys.
It's been a pleasure.
Thanks, Rahul, Jagan,
Thanks.
Lalita.
Thank you. Hi.
Thanks, Lalita. Thanks, Jagan. Thanks, Srini. Thanks, Vicky. Thanks.